should probably start recording it as well, besides streaming. So for those who watch the recorded later, the version later, as you can kind of see, this blue box or black box that's trying to signify the left end of that major wave that we're going through. For those who are more familiar and heard these sort of terms before, we are really going through some form of head and shoulders. Don't worry, I will show that in a far more of a cleaner sort of way in a second. So basically what I'm trying to highlight here is that we're about to experience the parallel or equal, if you will, asymmetrical symmetry. There are various principles and various sort of all principles to the cyclicality and to technical analysis and various sort of tools to how you measure and understand how these harmonic sort of behaviors happen in the stock market. And again, I definitely invite you to join the community, become a student in the One-on-One Academy, join the weekly meetings. Those people are the most up to speed and fully understand what's going on in terms of the analysis. Again, to highlight this, in fact, this is what I was trying to sort of show. Right here far in advance, if you can see that red A, sort of that framework that's going on. Of course, you know what, if I'll just go to the 1 minute, it'll make a lot more sense. For example, I was showing this, if you will, black and blue sort of set of little triangle, if you will, that I had it a little bit offset. I had it right here, and I was showing the idea of how the price action may behave. We never try to time the market, but rather understand its overall behaviors. In fact, I was highlighting how we may have sort of slippage into that narrower sleeve band, if you will, that lower partition that we already ended up testing multiple times. I kind of highlighted it, and in preparation, in advance, kind of knowing already what we're going to see, and I'll show you that through the momentum in a couple of seconds. I was already sort of drawing that red triangle you see right there in the background. Again, it doesn't have to happen exactly sort of on this location in terms of time, but rather what we're looking for this whole thing is to happen in terms of overall behavior, which means that whole thing still may occur somewhere around here, or with a little bit of a lower sort of tendency. I'm gonna show and explain exactly that. That was a drawing that I made, a diagram that I made literally weeks ago. I'll show you that later on my Discord. I spoke about this literally weeks ago, and so at that point in time I couldn't tell where exactly it's gonna be, but I was able to identify that impulse to the upside, that major corrective impulse that I will show you in a couple of minutes. So let's go to kind of a cleaner chart. That will make a lot more sense. By the way, here you can kind of see, if we go to the 30 minutes, that very same head and shoulders pattern become a lot cleaner and a lot sort of more obvious. Now, a lot of people really will misunderstand me, and I don't know whether it's intentionally or just, you know, general ignorance or whatever, and will assume that the right shoulder has to be identical to the left shoulder. No, it does not have to be at all. It does not have to have parallel support resistance levels, and in fact it can look with like so, with a major tendency and sort of scooting downwards and being a lot shallower in general. The overall idea is the structure that needs to occur. And in a couple of seconds, literally, I'll show you why I think that momentum is about to play out, where do I see it, why my expectation is as such, right? So, but that is the overall understanding of what my expectation is. Now, before I do continue with this, just for a second real quick, like so, don't forget, when you guys are watching the videos, don't forget to ring the notification bell. I know it's going to look different for me because I'm, you know, I manage the channel. Of course, I have slightly different buttons. You'll have here in the corner this little subscribe button. Maybe depends on which channel you're watching this through, whether it's the new one or the old one, does not matter. Both channels are the same. They're gonna be, you know, tackling the same thing. It's just me trying to put myself out there a little bit more to grow the community. By the way, community, shout out to all the new members, to all the beautiful legends who did join the community at a discounted price. By the way, the price is still discounted. Those who don't know, you can now join at $56 a month. If you change that little ticker to pay annually instead of monthly, it will be $70, which, by the way, that $70 is also tremendously discounted. It is 30% off. Simply at the end of this month, it's gonna be hiked to $99. $90.99 doesn't matter. It's gradually going to be hiked to $99. So definitely lock in a low price, so you will be just like my community members and you'll be fully informed and you'll not be caught with your pens down and sort of surprised by the price action, because that's usually what happens. People who don't care about technical analysis until they suddenly do. If you are on X, definitely follow me on X. I'm trying to build up a following, sort of a community as well there that will be aware. I definitely post my videos, all sorts of gags and jokes and whatnot. Here it is, for example, how early we were talking about 66666 and 6400 and the various levels that we're going to be retesting. In fact, you can see I was already at that stage telling you how we're going to be retesting that 6400. Yeah, so various jokes and whatnot. Of course, we talk mainly about technical analysis. That's kind of the main focus of the community. Given that we still have a whole hour to go, we still need to go over the price action real quick and the momentum and everything I was saying. So again, if you look from a smaller time frame, of course you will and use these momentum oscillators, what you will get to see instead of the actual sort of cohesive understanding of the impulse, you're going to see the granularity. You're going to see what's happening inside. These are representative of these sort of impulses. Of course, the problem with this is flat, it's linear, and the center point is named 50, or it's the 50 mark, not at the 0 mark. Very discombobulating, very confusing. But really, all you got to consider is that everything below 50 is bearish. Everything below 20 is ultra bearish, if you will, bearish on steroids, oversold. This is bullish above 50, and above 80 it's overbought, meaning every time we are in overbought territory with this green line dominant being on top of the red line, that means the dominance, and whichever line is dominant, that will represent the price action, the tendency of the price action and the actual occurrences in the market. And so whether we have more bearish or more bullish momentum, it's kind of remember, the market is not a turn-based game. We have both things occurring simultaneously. So basically this is bullish and bearish. You just see which side has the dominance at the same time, right, at that given time, right, given that sort of time frame as well, given that range. Because as we switch over, given how the data points are far more, we'll go into far further into the past, given the structure and the length that we use, which is, by the way, default. Those who don't know, you will be able to see the sort of the longer duration moving average that is coming out of this and the representation of its momentum. And subsequently, the further out we go, the more we can identify that bearish momentum that is coming through in the larger scheme of things, right? We're not then too preoccupied with the granularity and the noise that is happening inside of these very impulses. Like, for example, right here, we can see the impulse, right? We can see the impulse, but then if we can also focus on this, we can see the noise inside of it, which is also visible, but do not lose track, sort of, sight of the ball, right? Focus on your target, on what is important in this instance. And in this instance, as you can see, we are below 50 on the 45 minutes. And so we're objectively bearish with dominance of bearish momentum, and we're continuing with clear divergence downwards. So that's very bearish indication. So that kind of shows that the end of this session, given how we're basically 1 hour away from the session closing in, we're just merely going to have more and more, it appears to be within that framework overall, more bearish momentum, more downwards pressure. But where's that upwards wave, Greg, that you were talking about? So let me show you real quick. Of course, as you can see right here on the hourly, we're still very bearish. So that's not going to surprise me if on the pre-market next week, as we're going to open next week's pre-market, we're going to be a little bit more bearish. We're going to see another drop, sort of a premature step that then the bulls will have to compete and complete throughout the session. And so at the end of the day, all they will be able to do is just bring us to 0.0, kind of giving the bears more dominance over the situation. But if you pay attention to what's going on right here on the 4 hours, we are seeing convergence, we're seeing confluence of the forces. Usually after seeing that confluence, even if we are below 50, but we are bearish, bullish dominant, like so, just like in the example right here, we may see some shallow relative, because you can see, even though they are bullish in their nature. They still are shallow relative to the overall dominance of the bearish cyclicality or tendency that the market has right now. Again, that trend is pretty obvious. I think even a deaf, dumb, blind person can see it. It's pretty clear how we've been respecting that channel. Of course, we do have a little bit of slippage here and there, marginal error, standard deviation, if you will, factors, and various other little factors why it affects, you know, the price action, the crosswinds, if you will, why we don't stay within bounds perfectly. But we're not meant to. There's no intention of the market doing that in the first place. Again, this is why we have various other charts. Do not forget, as we go down through these channels, we do test various horizontal support and resistance levels that we have. For example, 6,500, 6,600, 6,666.66, which we have been seeing the market retest and acknowledge many times over and over and over again. Yes, those are psychological. We have a whole different chart that focuses more so on technicals. Those are those. I know it's a very confusing chart with a lot of noise in it. I guess now I can slightly remove at least some of this noise so you guys can understand what's going on here. So as you can see, 6,666.66 also was significantly tested multiple times. Again, if you ask yourself why I have it in separate charts, on purpose, not to be so confusing. As you can see, even a set of support and resistance levels can be very confusing for a lot of people, basically, and so I try to separate them to sort of, you know, not to confuse the viewers. Basically, you have 6,642.29, which is a significant level. You definitely want to be aware of that 6,619.83. Of course, a level we've just tested multiple times, and I was warning my community. My community was very well aware. As you can see, by the way, that 66.20 was tested on the way back, simply because we sort of plowed through via a gap. Although on the continuous contract, right, on the futures contract, we also have its own parallel support and resistance level that was tested on the way down. I actually don't have it on this chart, but yeah, it does have it. So yeah, different charts, different support and resistance levels. We will have these major 6506, which again is very much nearby that 6,500 flat. This is going to be a very close nearby support level that will be retested. Obviously, again, 6,488.98, of course, will be retested as well. I know, good to see you here as well. Hope you are safe, my brother. Really good to see you here. Now we're going to test 606 from below. Yes, pretty much, exactly. Now you're talking. So now when we're going to have that corrective impulse to the upside, right, which we can see starting to be built up right here, the momentum is slowing down right here, right? We can kind of see that. We see that curvature starting to happen. So we're going to see something very similar to this, similar to how that was able to push. That impulse is equal to this push all the way from 6,557.82 all the way to 6,636, a shallow upside correction, right? We're going to see something similar. Again, when you go deeper, you're going to see how I tend to stretch these things out. I'm not thinking it's going to take yay long. I'm just doing this in such a way so it's going to be visible what is expected. It's going to be weird if I'm going to just draw that. You know what I mean? It's going to be very difficult to understand, but if you really want to insist, that's kind of the expectation, right? Give or take, or so, if you will. We can see something like akin to this, similar to that behavior we had right here, if you want to, like this, and then another major drop, right? So these shallow corrective movements, basically, the idea here is very simple. The trend is your friend, right? The tendency of the market right now is downwards. The cycle, the whatever you want to call it. The same way we have shallower corrective bearish movements, dips, if you will, right? On a bullish trend, on an uptrend. Again, this is, by the way, the major difference between, like, Greg, we've seen these corrections on an uptrend, right? But now we are correcting upwards on a downtrend. Don't you see the difference? I mean, it's pretty obvious. In fact, that's the whole idea of shallow and motive and corrective. So what we're seeing here is more so than anything a potential corrective wave, which will create some form of parallel behavior to this. It does not have to be equal. That again, that circle does not really represent the confines within which it's what is going to be. It may be within these confines at the end of the day, even if it's going to slip in and out all over the place, right? We are basically creating what is the parallel and equal shoulder on the right side to this left side. Pretty simple. For those who, again, really want to understand what's going on and stayed all this time with me for the recorded version or for the live. Shout out to all of you who do watch me now, even if you're not saying anything because you're shy or whatever. You know, shout out to all of you beautiful legends. So yeah, the grand scheme of things here is basically the idea. The bigger, broader picture is that even if we're going to have a little bit more downwards pressure, this lower point does not have to be equal to any of these. In fact, it's going to be very logical if that lower point will be somewhere within that region of 65.06 or 64.88, right? If we're going to kind of hold off somewhere around here, as we can see the momentum and the cycle, the tendency is coming to an end, so it's not going to be all that weird to see some form of corrective wave that will actually be this sort of thing. It does not have to be this high. This is overall general guidance. Again, I'm looking so far in advance that and I can tell you a lot more than anyone else, so don't expect me to tell you precise points yet. Even though we do understand that most of these points will be one of these support and resistance levels, especially probably one of the major ones. On the grand scheme of things, you have to remember that we still are bearish. The larger the time frame, the broader the view, the more we understand we still are in a downtrend. As you can see, the downtrend is a lot steeper than the uptrend. Why? Because conviction takes time to build up. People have to see the market go up and down up 100 times, and probably by the time they do get conviction built up, that probably is the worst time possible, and they jump into seeing the less 10% sort of move higher. They are happy. They think they're the smartest people on the planet. In reality, you're misled, you were lulled into this comfort zone to think that you know what's going on in the market, you understand the price action, when in reality it's actually a trap, literally an actual trap. And I mean, well, to be more precise, to be more so on point, a double top bull trap, which you then get bought into, when in reality the market breaks, and then there's another trap which is going to be internal, which is going to lead you to believe that, oh look, we had that sort of these highs before, look, we've had this behavior before, we've corrected, we ended up moving higher, which will be parallel to some higher than some other high, and sort of will convince you, will give you conviction to jump in. Will be the worst possible thing you can do. Again, I'm not your financial advisor. This is not financial advice. You do you. I'm not going to tell you what to do. I'm merely showing you what my analysis leads me to see. Alex, you beautiful legend. Good to see you. Peter, hello, watching. Salute to all those who are watching. Love you all. And even those who will watch later. Right now we are basically going to form the right shoulder, which will include some short-term uptrend. Absolutely, exactly, very good, Noy, very smart. 200 IQ, as I say in the community, in the Discord. But unlike the left shoulder, that was in an uptrend exactly, this one is on a downtrend, and the up is short. Wait, and the up is short. Yes, exactly, and more so, it's not just that. The whole way the shoulder, the shrug of the shoulder, if you will, which has more of a bullish tendency, this one can have far more of a bearish tendency, which means we can get locked in. Like, imagine if that is our channel, right? If we were moving and creating the head and shoulders within the framework of the channel that we were moving within, the framework of the channel is now a lot steeper, you see, and a lot narrower. This is just symbolic. It's to symbolize the overall internal behavior. It can be on a far steeper angle downwards. Hello, everyone. Hello, Avi. I hope you guys been listening. Don't worry, all of this is recorded and will be uploaded in. Of course, you'll have the live to watch later, and it will be also uploaded in video form. Those who are not members, definitely join in the community. You have the link right up there, patreon.com/Greg_Re_H. Look up for both channels and subscribe. I will try to inform and post both on both channels. You're like, Greg, both channels? Yes, both channels. There are 2 channels now. There is this channel, right? And now there is, let me show you this. Nope, go on. This channel. Don't worry, the same video was posted, well, not this very same video, basically, but the same idea, the very same sort of information was posted on both channels just yesterday, so don't worry, you can find both of them sort of on whether it's this one on the regular channel or this one on the new channel. Subscribe to both, it will help me a ton. I'm gonna drop the address right here into the chat. Into the chat in a second. Into the chat. Come on. And here it is. Got it. Yes, yes, yes. Yes, yes, yes. Yes, yes, yes. Can I even post this way? No, I can't. You guys can't even see this. Jesus. Give me a second. Sorry for all the stuff. One sec. Here it is. The link is in the chat now for those who wanna subscribe to the other channel as well. The other channel may become over time the main one. Follow me on X, and just because, why not, right? Those who are not subscribed or members of the community, now the Patreon is 30% discounted, $70. If you change that little ticker, $56 a month instead of 70, and you lock in that price. Why is that important? Because in a month, at the end of the month, basically, this is going to change to be $90 or $99. Basically, this whole thing is going to become $100. So definitely lock in the price, because once you lock it in, you're going to stay on that price as long as you remain subscribed. And what is the advantage of being subscribed? Well, you can ask my members in the community. They are fully aware and prepared for what is happening. This entire occurrence, while everybody were mocking technical analysis and saying it's, I'm crazy and whatnot, while this was going on, and I was warning again and again and again. And it is kind of insane how lucky people got that they had this whole opportunity to being told all along. In fact, it's quite a lengthy period. In fact, if you look at it from a monthly standpoint, I was warning about this far in advance, and arguably the market overshot significantly what was not even meant to happen. It's just the average sort of retail market participant. I'm not going to call you, investor, trader, none of it matters. Again, you guys really use the jargon completely incorrectly, and I tell you that as a professional who worked in the industry for over 15 years. I mean, you really guys don't get it right. And I'm more so, I'm closing on 2 decades soon, probably like 16, 17 years, with everything. I have no idea even at this point. So yeah, you guys really misunderstand the whole terminology of investor, trader, and all that, and really misuse it. The bottom line is that people were convinced on the wrong idea, and in fact should have been tremendously grateful the market overshot tremendously, and this entire impulse should have been a lot more flat and a lot shallower. This ended up being significantly much, just several 100% higher than what it should have been on the grand scheme of things, if you will, especially through the individual assets. So those who did not capitalize on this, boo-hoo, so to speak, cry me a river, because I was warning literally if it's 1, 2, 3, 4, 5, 6 months, half a year, if you will, in fact longer, because the whole process, we knew that this wave does not have to play out the way it did. It could have ended up playing out completely different, a lot shallower, a lot more bearish. Like basically what we're experiencing right now should have occurred about a year ago. The fact of the matter that, and again, time-wise, we don't really time the market. That is part of why we don't time the market, because we understand that even though the cyclical behavior will occur, will happen irregardless of whether we understand the signals or not, right? Or or we see the events, so to speak, that's going to be the event itself that's going to bring the straw that breaks the camel's back. In fact, if you want to ask in my community, I've made fun of this and I said potentially it's going to be a war that hasn't started yet, and I highlighted how oil will be a major part of it all, and those who really want to be prepared probably want to build up a position before it happens, because it's going to happen in a surprising manner. again, all these things were spoken about in the community and discussed significantly. Today, 50 shares holding 100. That's cool, Peter. Again, it's up to you. You do you. I can't. Your. In fact, I do not advocate for SQQ position for arguably non-professional people, because most people do not understand how to handle that position, what are the benefits, how to play it. The fact that I'm transparent and do open up about how and what I have is simply because I'm just an honest person, and I really sort of, those are my personal beliefs and morals, and I just believe it would have been weird if I wouldn't tell you guys, and just, you know, dishonest. But I advocate this position for the average market participant? No. Most people have no idea what they're doing, and this is one of the reasons why I invite people to come to the academy and learn. You see, I don't have to explain this position to my students. They fully understand this position, how it should be handled, what kind of pain tolerance it requires. If so, by the way, those who want to know, our 3 months crossed over. As I was warning and saying, the 3 months will cross over. Once that crosses over, we will become a lot more significantly bearish. Of course, larger time frame, as we understand, the quarterly time frame, but it does signify the very significant low, which we will end up experiencing over time. Again, it doesn't have to be all that far off. I'm exaggerating just kind of so it's going to be visible what it is that I'm trying to say. In fact, it can be very steep, very much like so, right? The target is roughly around that 3300, which, as you can see, by the way, just the mere channel of it is 3200, 32.62. So just this tells you that we're probably going to be ending up lower than 3300 precisely. So be prepared. Things are going to get very, very nasty. I warned people who wanted to listen, listened. People who wanted to learn, learned. People who didn't, well, boo-hoo, cry me a river now. Agree on last year, how much? April last year. Again, April last year, by the way, April last year, I advocated for people to consider taking some profits off the table, because I knew we still may have a higher sort of shot happening. Again, for me, it didn't matter that much, because I understood it doesn't have to be, and can play out being a lot more shallower and actually having a downwards tendency before people expect it, sort of making it a big mistake to liquidate at that April high, low, whichever, again, if you're buying or selling, if it's SQQ, again, sort of selling at the lows. But in my humble opinion, it was a major mistake, simply because you got to, again, you don't have to do anything. In my humble opinion, it's better and safer to play out the major movements, if you will, swing it, ignore the noise, even if sometimes it's noisier than you expected it to be. Why? Because, again, the fact that it played out the way it did, it doesn't mean it had to. It could have played out completely differently, which would have backfired significantly. Again, I'm happy it turned out well, and I'm happy for you. Crossover, let's go. Triple key position. Okay, that doesn't fully make sense as triple Q. I mean, your benefit of, I see, if you're talking about the corrective uptrend, I see what you're thinking. Again, you do you. You realize that this uptrend is not a given. That's exactly what I'm trying to say here. It may disappoint you significantly, and then you end up losing an already great average on your, again, you do you, not financial advice, right? You're an adult, or at least should be. The beauty of the stock market, that you have to be 18 to get in, or at least have permission. But otherwise, you should be an adult, sort of, mind-wise, right? Doesn't matter what your age is. I've stumbled upon some really dumb adults and really wise kids, if you will. 18, 19, 20-year-old kids, if you will. Very wise, intelligent beyond their years, literally, and truly understand the whole idea of the frequency of the movements, how the frequency can narrow, can expand, the cyclicality, the momentum, the support and resistance levels, and how all these things come together to build a overall singular formula to be able to analyze this thing the way I do. and so to be independent. In fact, plenty of my members are independent. That is the whole goal. So the members, the academy members, those who just join the Patreon to be a fly on the wall, that is the kind of the entry level. That's the whole idea, that you can join, get an idea. That is that tier. Join in, get an idea of how it works. There are meetings, the discussions, daily updates. I update my community on the daily basis through the Discord. They all know exactly what I mean and everything. They get to discuss among themselves. For example, here you can see Noy and Elrond are discussing, they're all having their own conversation. In Greg's charts, I inform my members on a daily basis. For those who are not clear about what's going on, I try to highlight and mark and show and explain, right? In the academy, of course, there is a lot more than just this material. Did I just delete? No, I just want to do. But yeah, basically that. I make fun of how it's magic that I'm able to predict these support and resistance levels, how they're all random, right? We literally make fun of how not random the market is and scalpel accurate. But look, you're not going to be able to predict nor understand what it is that I'm trying to show if you're not going to learn the market's language. And if you won't, you never will. It's just like watching a foreign movie on a language you don't speak, and you never will, literally. Mic drop moment, right? Again, I'm kind of like highlighting and explaining these things and so on and so on. And you can see how early on I was talking and explaining to my community members how these things exactly play out. Of course, we talk about various assets, including oil, you name it, again, precious metals, the various safe havens now, of course, which are very, very much, you got to understand what's going on there. Otherwise, you won't. Again, making fun of things, how the market is just, dropping off the roof, if you will. Most people are just unable to see it. In fact, the way it took so long, it's almost like these Warner Brother cartoons that go over the cliff. They go over the cliff edge, right? They stand up in the air, look down, and only then they realize it start dropping. That's kind of how the market behaved this time around, if you will. Yeah. Next analysis is gonna be done through mimes. Returning profit, still holding. Wonderful, Peter. All right, cool. Gold buying opportunity. Nah, the gold is quite complicated. Gold is not really a just straight on forward or buying opportunity. In fact, it will have probably, as far as I can see, a major correction downwards, and everybody will think it's completely in line and intertwined with the market, and kind of how irregular it is. As irregular as it will appear at the beginning, it will still. It's playing out its own cycle, if you will, and going through its own rhythm, frequency. And so when everybody will finally sort of come to conclusion and conviction that gold and various other safe havens are intertwined and moving in tandem with the overall market, with the stock market in general, and this time around they're not going to behave like safe havens, that's exactly when they're suddenly going to pick up back up and make even a higher high than they have had before. So, I mean, that's my analysis, and I'm not telling you what it's going to do, I'm merely telling you what I think it's going to do. Or rather, what my analysis brought me to see. Oh, my camera is completely off. I am even like basically seeing only a small part of me. Right. What else? That's it. I think that's a nice thing. What is going on? Right, as I was about to finish the live. Don't worry, it's all going to be uploaded. Like I said, again, still bearish momentum in the system. So let's see what just happened. Really, what do we get? It is so exciting. Oh, we just crossed closer to that. Major 64.88 level. I see. All right. Timing early May. I see. So you're okay. I see what you're thinking, then, Peter. Okay. All right, boys and girls, I think that's all for today's live. I will upload this as a video later. Of course, you can watch this if you go, those are unfamiliar, if you go to, on every channel, if you go to the, oh, you don't have it here, of course, but of course, if you go to every channel, right? If you go to the channel itself, there's the bell, by the way. You'll find this first right here in the live section where all the other lives are, right? Those who are not familiar. And of course, later it will be uploaded as a video on the other channel, on the on this channel, right? It's gonna be uploaded right here because the live is there, so it's kind of, yeah, to separate. That's it, ladies and gents. I'll see you on the next one. I hope you all have a wonderful weekend. Stay safe. Spend it with your loved ones. Don't forget to tell them how much you love them. Don't get angry at them. It's not worth it. Life is short. Yeah, love you all. Bye-bye.